AMD versus Intel, or otherwise said Tenbagger versus buy to dip. Which way to go? We take a look at this. My name is Thorsten. I'm the founder of this beautiful website you see on your screen, helping already more than 40,000 members to find their stocks for their investments. Both stocks, AMD and Intel, reported their quarterly earnings. Recently, Intel blamed Corona for disappointing numbers, while if you look at the earnings report of AMD, there's no mentioning of Corona at all. They did not need a scapegoat, obviously. Their sales and earnings went up, while Intel really isn't going so well right now. Accordingly, AMD is a Tenbagger within the last years, very high capital gains, while the stock of Intel experienced capital losses, but they have, and you will see it immediately, they pay nice dividends and they have a completely different risk-reward profile. And we examine this, and then you can see which stocks is of interest to you or more suited to your investment strategy. Okay, this was the theory. Now let's go into detail. I show you 3 different stocks here, not only 2. Xilinx will be acquired by AMD. This is why I decided to show this stock to you too. So let's look at some numbers here. First, market capitalization. You see that Intel is still twice as big regarding market capitalization as AMD, about 190 versus 92 or 93 billion US dollar. And then we have Xilinx close to 30 billion US dollar, and they will be acquired by AMD for 35 billion US dollar. And this is a big morsel to swallow for AMD, and we will see what that means. Interesting maybe for you, there is Intel paying nice dividends, close to 3% even than there's AMD, and I'm completely sure they won't start paying dividends within the next years. I will explain you shortly why. And there's Xilinx soon stopping or ceasing to exist. They were a good, very solid dividend payer together with Intel, which is still a good dividend payer. Dividend stability of 0.99, close to 1, the highest value possible. This stability matrix, with a range between -1, very bad, until +1, and 0.99 is extremely well. Here you see the dividend increases, and dividends are still increasing, not so much as you might want with 3%, but on the other hand, you start with a dividend yield of 3%, and dividend, in my point of view, still very safe. Look at these payout ratios, very low, about 25 to 27% regarding either earnings, reported earnings, or free cash flow. Then we have these green metrics here with the green background regarding earnings, cash flows, revenues, and here you see that Intel shines with very high numbers, very high stability numbers, while AMD is really disappointing here. Earnings stability low, the operating cash flow stability even negative, revenue stability a little bit better, but still not exceptional, while the numbers for AMD are much better. But if you look at the growth rates, then you see, especially if you look at the estimated growth rates, that AMD really takes the lead. What does it mean if I say to you that the stability, profit stability in general of AMD is low? It means exactly what you see here. There are a lot of ups and downs, and recently we are in an upward trend. But if you look into the history of AMD, you see a very mixed bag, while if you look at Intel, you see a much smoother increase of earnings, cash flows, and in this case of dividends as well. Unluckily for Intel, AMD just took the lead. What does it mean? It means that for Intel, revenues are expected to decrease. According to analysts in the business year 21, there will still be a slight increase according to management for the current business year, but next business year things shall even deteriorate a little bit more. Also, margins are expected to decrease. Operating margins, by the way, of Intel, 32%, gross margins of 56%. Remember this, and then let's compare that with AMD. First, you see that while for Intel things are stagnating or even going down, for AMD things are going up. Revenues, margins, earnings, cash flows. This is exactly what Mr. Market is enthusiastic about. Mr. Market doesn't care about the future, about the past. He cares about the future, but still operating margins are very much lower than the margins of Intel. This might be something many investors forget. Gross margins were 56%, if I remember well, of Intel, and operating margins something in the 30s. And you see that it's much slower here, but AMD is on the right track. You can see it here very well. And Mr. Market rewards this with extremely high capital gains. This is the sell-off of yesterday, the price change here, but you can see if you look back at the capital gains of 1 year, then at AMD more than doubled. 5 years ago, there is a 3 times a Tenbagger AMD. This is really fantastic for any investor, while Intel stock only capital gains of 27.5%, which is rather disappointing. And then we have Xilinx, and Xilinx, you see it here, is also a very promising company. Let's continue with Xilinx, just to give you an idea about this company. Here you see that it looks even maybe as well or even better than the evolution of earnings and cash flows of Intel. What are they doing? They sell field programmable gate arrays. These are very they are used for high performance. I'm not going too much into detail here, but this acquisition is something Intel already did when they bought Altera, a company like Xilinx in the same field of these field programmable gate areas back in 2015 for $60.7 billion US. So AMD follows Intel in this regard. What does it mean for AMD to buy Xilinx? It is, I'm pretty sure, a burden for AMD. I'm not saying that it's the wrong choice to do that, but if you look here into the evolution of the balance sheet of AMD, you see like a diary what happened to the company, to AMD. You see here that the balance sheet increased. That was when AMD bought ATI, when they entered the graphic cards market, and then there was a lot of goodwill here, and then things did not go as well as planned. There were a lot of write-offs. You see it here, a lot of write-offs, and then the debts even increased, and especially the debt ratio, still 50% before the acquisition of ATI, increased to 53.68, close to 100%, and AMD was close to bankruptcy here, and they really faced big problems. They only had one choice, to sell their fabs, to make a spin-off. That was the birth of global foundries to get rid of their debt. They still had a lot of debt, but here you see that the balance sheet decreased, and then there was a very hard time for AMD, while the debt ratio even increased, even exceeded 100% here. And it's just till very recently here that things go well again, but they really go well. You see it here with the debt ratio still 85% according to the balance in 2016, 85%, 80%, 71%, 52%, and now, and these are the most recent numbers, 44% only. You see the amortization power, it is this area, and now it gets green for the first time for a very long time. And here you see the number of outstanding shares is increasing. It's increasing for the complete history of AMD. Without that, without these capital increases, AMD would no longer exist, and they still do it till today. And when they will acquire Xilinx, which will happen most obviously latest next year, within the next year, then balance sheet will increase once more and the debt level will go up once more. It will be exactly or something similar to what we have seen here, but hopefully more successful than after the years after ATI was acquired. By the way, the acquisition of ATI was a very good move, but it did not pay out immediately, as you see here. Okay, AMD versus Intel, which stock to buy? It depends on your investment strategy, of course. So if you want dividends, then there's only Intel left. If you're looking for high capital gains, then AMD might be more interesting to you. It also depends on the valuation of the stock, and this is what we are looking at right now. And there I will show you that both stocks have a very different risk-reward profile. First, looking at Intel here into the valuation tab, and this is our dynamic valuation, and I'm going to choose the right time frame for the valuation of the company, and I think we can even exceed it going there, and then we can calculate here these, or we already calculated these different price earnings. Now we take this one, it's much better. I think it's much more realistic, because here obviously were write-offs. You can see it by looking at the difference between adjusted and reported earnings. We have all these on parallel here, and it helps you to calculate different fair values on parallel and to choose from the fair values which look the most realistic, because fair value calculation is always an estimate. Get rid of this one here, then of this one, and then we will show you the different calculated fair values here. And let's zoom in a little bit more even. I think we can get rid of this fair value based on reported earnings, and then we still see this, and still going there, zooming in, and this is where the stock is right now, $44, and then you see according to cash flows and adjusted earnings, the company seems to be undervalued. Intel, I wouldn't take this point for the fair value calculation, but rather because earnings go down this point or even this point, and then connecting both points here. This is $57. This is what the company would be worth, their fair value, if you calculate with adjusted price earnings of about 10. Remember these multiples here, which are much lower than the multiples for AMD. And if you connect these both points, then you get an annual yield. This is your reward of 15%, which is attractive in my point of view, and it takes into account both capital gains and dividends. 15%, and these 15% are the result of a current undervaluation, especially. It's not a result that the cash flows and earnings go up extremely or go up, but it's just that the stock price went down so much and now Intel is undervalued. For AMD, things look very differently. Things look very different. There you see it. You see here the capital gains of AMD. It's really outstanding, but you see also here the history of AMD, which was not so enjoyable for investors invested within this time period here. AMD is a little bit more different to calculate reliable or sound fair values, but we can try anyway, but we must restrict ourselves to a very short time frame here, choosing only this one and then looking at the adjusted earnings. This is my proposition, and then we do this, and then you see here the fair value is calculated, current stock price $76, and if we look at the fair value, and here you see the matrix, the price earnings based on adjusted earnings, 51. It was some about 10 for Intel and 5 times as high for AMD. And what's interesting is right now the stock seems to be overvalued, and current fair value based on the current business year is about $58. Stock price is $76, which means there's a short-term overvaluation. There's a risk. There's a risk of the stock dropping about 25% back to the fair value here. On the other side, there's a high reward profile. If adjusted earnings go up as planned or as estimated from the analysts, then there's a high reward. Let's connect the same points as we did for Intel. Then there's an annual yield of 90.3% to expect, because fair value would be already $134 compared to $76 right now. And this time your reward, your yield, is not coming from an undervaluation as it is the case for Intel, but from growing earnings in the first place and growing cash flows as well. You see how cash flows and earnings are expected to go up. So both companies have a very different risk reward profile. More conservative investment, of course, is Intel. If you don't need dividends and you are not shy to enter risky investments, then AMD might be the way to go. But I just wanted, it's your decision which stock to take, if either stock to take. I just wanted to show you the different risk reward profile of both stocks, so that you can make a better choice which one maybe to buy. Thanks for watching. This was Torsten. I hope you enjoyed the video. See you next time. Ciao.